Good afternoon, everybody. Lovely. I've never been given such a wonderful reception. Look, I really don't think I even need to speak because Nigel there really did my presentation for me. No, look, we're going to go through insurance today. Now, please just be nice to me. I'm suffering from quite an angry cold at the moment, and I can't hear in this ear, so you people, sorry. And if I look like I'm going to pass out, if someone could just please come to my aid, that would be very helpful, I think. So, 21st Century Insurance, represented by me, Sacha Loutkovsky, that's my name. They are my qualifications. As Nigel mentioned, my father Igor and I look after the company. Has anyone seen me speak before? Oh, hello everyone. Anyone seen Igor speak before? Oh, Lord. Okay, well, for the rest of you, you're going to learn a lot today, and if you have seen us speak before, we're just going to cement in those ideas that we spoke about before. So, Loutkovsky, bit of a mouthful there. We're Russian, but you're going to have to get used to it because, funnily enough, and originally enough, I work for a company called Loutkovsky Insurance. We'll go through a little bit more about us in the next couple of slides, but what we need to understand from this slide, is just some legal things. So I need to tell you that we are authorised representatives of Marsh. Now, Marsh is one of the biggest risk specialists in the world with over 60,000 employees, and all that means for you guys. All that means for you guys is that when the time comes, you're guaranteed to have your insurance needs tendered to the marketplace. Just a fancy word for put forward to the marketplace and see what is the best thing we can do for you. So who is Loutkovsky Insurance? Between us, we have 71 years of experience. We've got 8 staff, 5 of whom are qualified advisors, and our offices are in Parramatta in New South Wales. That's not a boundary to us doing business with any of you, though, because we have clients all over Australia and all over the world. We've got some of our clients in Denmark, the States, Vanuatu, Thailand, England, China. They're everywhere, so no boundaries there. And some of our clients, past and present, include Jamie McIntyre and a lot of the 21st century staff and speakers. Television personality Steve Liebman, ex-Olympian beach volleyballer Natalie Cook, Michael Voss, Paul Harrigan, and several CEOs of major ASX-listed companies. The reason I'm telling you this is because A, I'm extremely proud of the work that we do at Loutkovsky Insurance, and secondly because we are risk specialists. It's all we do is life insurance and everything that falls under that umbrella, which of course we're going to go through. We're specialists, it's all we do. We've been doing it for 26 years, and look, we're pretty good at it. Not going to lie. I'm not going to put any bones about it. So that's just a little bit about us. So, these are the companies that are going to be vying for your business. Now, when I said we'd tender your needs to the marketplace, this is the marketplace in which I work. These are the companies that work for me. I don't work for them. I'm not tied to them in any way. They give me no financial incentive for working with them. What we do is we take your needs, your case, and we present it to each of these insurers and see who can give us A, the best price, and B, the best product for what your specific needs are. So up there we've got AIA, AMP, Astron, Aviva, CommInsure, ING, Tower, AXA, MLC, Macquarie, and Zurich. They're all the companies that could possibly have your insurance policy. So let's get down to it. What is insurance and why do we need it? Well, that's one reason. But look, insurance is such a simple concept. But I'm going to ask you a question. Who in this room has car insurance? I expect most of you have a car. Who's got home and contents insurance? Perfect. Anyone got public liability insurance? Self-employed people and stuff in there, good. So really, insurance is just protection. That's all it is. And you can insure anything that has a value, house, car, your cat, your fridge. You can even insure your moustache if you wanted to. In fact, look, I've heard this is true, but I'm not entirely sure. Merv Hughes, the Australian cricketer who had that fat handlebar moustache, apparently at the height of his career, the moustache was such an asset it was insured. I guess what? I'm not sure, but it was insured. So basically, it's a piece of property we're protecting. And it makes complete sense to insure this piece of property. You've got your car, it's valued at $50,000, okay? It's written off in an accident. Hopefully, you've just written it off yourself, and look, hopefully you're okay. Hopefully you haven't hit anyone else. Let's just assume that it's just been written off on its own. You don't have insurance, you need another car to go about your daily business. Where are you going to pony up the money for another car from? No insurance company is going to get a new one for you. It's got to come off your hip pocket. So, as a result, it makes sense to put a little bit of money to a premium each year so that if that happens, we can get a new car, no worries. Very simple. So, insurance is just protection. Protection against what? Protection against loss. That's all it is, protection against loss. And I guess for the people in this room, for everyone here who's looking at getting into investing, property, shares, that kind of thing, the way you need to look at it is it's just the cost of doing business. Okay? You want to buy a property, the first thing, or one of the first things you're probably going to do if you get tenants in there and stuff, is get landlord insurance. It's just the cost of doing business. You got a lot of super, you want to set up a self-managed super fund. Costs money to do that. That's all right, it's just the cost of doing business. But what really I don't understand with Australians is why people have such an aversion to protecting themselves. Because none of this happens without you. And that's what the essence of my presentation is about. None of this investing, none of this financial freedom is going to happen without the money that you yourself produce, without the capacity to produce that investment. However, there are some cases, I'm Russian, it's in my blood. No, look, there are some cases where you don't need insurance. The first is that you have an extremely rich relative who's sworn on the grave of their mother, father, grandmother, and the tomb of Tutankhamun, and of course put in writing, everything needs to be in writing, that they will look after you and your family in the event of a calamity. Put up your hand in this room if you have someone like that. Please do. Because if you do, I'm just going to become friends with you, really close friends. Okay? The scenario is not many people are in a position where this is an option for them. For me, the National Bank of Dad is now closed. So I have to find my own ways and means of protecting myself. The second reason is that you have a net working equity of more than $2 to $3 million. Now this is not I have a $2 million asset with a $1.5 million debt. This is that you have a $2 million unencumbered asset, no debt at all. So you go out and you invest that $2 million at 6%, and that will provide $120,000 per annum for you to live on. If you require more to live on, then you need to invest more. I'm guessing most of you in this room aren't at this stage yet. That's what we're working towards. Fantastic. I want to help protect everything until we get to this stage. Now, the next section we're going to run through is the types of insurances that I can offer you. Now, I deal with this stuff, and I always make this disclaimer. I deal with this stuff on a daily basis. It can be very depressing. Death, serious injury, ugh. I deal with it every day and it can be quite depressing. So I've developed a nice little blasé way of dealing with it. So please try not to be too shocked if anything I say comes out slightly blunt. The first cover we deal with is called term life cover, often called death cover or life cover, whichever way you choose to look at it. I like to call it drop dead cover because that's what it is. Okay, dead, dead, dead. Dead, that's all it is. The insurance companies do not like calling it drop dead cover because it doesn't have a great marketing tone, but that's what it is. The overarching way I choose to look at all this insurance, and basically everyone should choose to look at the life insurance spectrum, is that everyone has a couple of values. Every person has a couple of values. I'm talking about ethics and those kind of values, okay? First of all, we all have a financial value. Every one of us, self-employed or employee, can earn money. We all basically have a job, which is our basically our financial asset. The second asset is, I guess, our knowledge. Okay, so what we're going to do is, if someone dies, okay, we've got a family, single income earner. If the main income earner of that family dies, first of all, we've lost any knowledge of, some knowledge of investing. It's gone. The second thing is the financial value. Okay, if that person earned 50 grand a year, 1 year basically, we can, that family might be able to support themselves. But going forward, 5, 10 years, if that family needs to be supported for 10 years, that's 500 grand straight up they need to be insured for. The first thing we want to do with death cover is replace the income, replace the financial loss of XYZ person's demise. Okay? What we also want to do is straight out cancel any debt that's left. So we've got the family home that might have 250 grand owing to the bank. Bang, get rid of that first. If nothing else, let's get rid of that. So that way the bank's not coming after your surviving family members to kick them out of the house. Then let's create a capital The financial that is lost, let's create that capital to keep that the finances going, basically, keep that family to be able to look after themselves. Term life is a tax-free lump sum in most cases. If it's through super, it can be different. But it is always a lump sum. 250 grand, 500 grand. I've got a client who's insured himself for $10 million. Okay, whatever you want, how much you want, we can do it. The second lump sum cover is called total and permanent disability, often shortened to TPD. Okay, it's basically used for the same things as death cover. Cancel out the debt and replace the financial value of the person who's become totally and permanently disabled. What else is really important about this cover is that total and permanent disability means you're still alive. Okay, you, the person, has become totally and permanently disabled. Whether you've been in a car accident and you're now left a vegetable for the rest of your life, or you've had a mental breakdown. Okay, that in some cases can be considered totally and permanently disabled. You're not going to be doing much of anything work-related ever again. Okay, so what's really important there is that we need to basically look after the person. So in a lot of cases, you know, sometimes it's a little bit better if the person ends up passing away, especially in a case where they might be left a vegetable, they're in a coma or something like that. Okay, so it's all very heavy. It's all right, people, breathe. Just breathe. I'm looking at a lot of forlorn faces out there. But this is what we have to deal with, okay? The scenario is death and taxes are guaranteed, okay? Hopefully none of this other crappy stuff happens to you in between. But if it does, that's why we have insurance. And of course, the thing with insurance is once it happens, it's too late. The next cover we've got is called critical illness cover. Again, a lump sum cover. Also a living cover. Basically, you're still alive. It's all in the name. All of these covers are all in the name. You are critically ill. You've got your little dartboard there and you throw a dart at it and it lands on one of 60 terrible, crappy medical conditions. Cancer, heart attack, stroke are the big three that all my clients always seem to claim on. It covers other things like severe burns, paraplegia, rheumatoid arthritis, things like that. It's an interesting product. Excuse me. It's an interesting product. It was only developed about 30 years ago, which is quite short, quite recent in the history of life insurance. It was invented by a South African heart surgeon, Marius Barnard. The South Africans are very, very innovative when it comes to their life insurance industry. They are light years ahead of anyone else in the world. But what Dr. Barnard was finding is that people would come in and they would have had a heart attack. And he could fix them medically. He'd fix them up, they'd be great, their heart would be 110%. But financially, they'd be buggered. It's not a cheap thing to have a heart attack. Then what was really sad for him was that 5 years later, he'd see the same people back on his operating table because they'd had another heart attack because of the financial stress. So he sat down, he contacted the life insurance industry, and they came up with this product, critical illness. Basically, you suffer from one of these crappy things, you let your advisor know, bang, tax-free lump sum payment. However much you've insured yourself for. I've got clients who have $50,000. I've got clients who have $1 million of this cover. It, to me, is one of the most important covers because the critical illness sphere of conditions doesn't discriminate. It can happen to anyone at any age, of any gender, regardless of what you do, what risk situations you may or may not put yourself in. And the scenario with, I guess, critical illness, I mean, a lot of people aren't necessarily passing away from something like cancer or a heart attack these days. Pretty sick, and we're off work for 2, 3, 4, 5 years. And that's what this is designed to do. It can be a smaller amount than the death cover and things like that. It's just really to tide you over until you are able to get back to work, to look after the costs of immediate care, the medical costs associated, to substitute your income while you're off work, the ongoing costs, childcare, things like that. If you've got cancer, you've got to go for chemo treatments 2-3 times a week. What are you going to do with the children? Things like that. Lifestyle changes to accommodate for those, and also to cancel out debt if that's something you'd like to do. Like I said, very important cover in my opinion. Everyone needs this. Cancer, heart attack, stroke. I mean, look, it even covers things like Alzheimer's disease, but you'd probably forget to make the claim. Thank you. Thank you very much. I do love that joke. I do. Bit of lightheartedness to my industry. So that's our lump sum covers. But look, The thing with critical illness is it's hard to know how much cover you might need because the cost of a heart attack is vastly different to the cost of cancer, vastly different to the cost of being 80% covered in burns. Okay, so let's look at the cost of one of the drugs on the market at the moment. This is a drug for breast cancer. It's called Herceptin. It is a revolutionary drug. It's a therapeutic antibody treatment that has shown an increase in survival time. Recent trials have shown women who took the drug after surgery and chemotherapy for breast cancer reduced the likelihood of recurrence by 52%. And I'm missing a D there. And reduced the likelihood of dying from breast cancer by 33%. A very important drug for people suffering from breast cancer. Unfortunately, it's not government subsidised. And 1 year, one treatment of Herceptin costs 60,000 Australian dollars. Where are you going to find the money for that if you don't have one of these insurances in place to look after you? Next, we've got children's critical illness. Basically, we add it to mum and dad's policy. It's a little tack on, little addition to your policy. The children's critical illness policy is really good. It's a death and a critical illness policy rolled into one. Okay, now I do hate to talk about this. No one likes to think of their little ones having something happen to them, okay? And from a financial perspective, I'm going to be totally blunt and say, look, kids don't bring anything financial into their household. In fact, they just cost you money. Okay? It's not to replace their financial loss if something was to happen to them, obviously. Okay? It's a lump sum payment designed to look after them, of course, if they suffer from paediatric cancer or something like that. And of course, if they pass away, to ease the emotional and financial burden on the parents. Okay? Take a year off work, get your head sorted, whatever. Okay? Because the scenario is that if anything happens to someone's kids, or your kids, you're going to drop everything to look after them. Quit your job, whatever, just spend time with them, get them better, help them get better. If we cover them, it can make that financial loss caused by you not going to work a lot easier. And it is cheap as chips. Children's critical illness is calculated on a different rate to adults. It's just a standard fee per $10,000 of cover, about $10 per $10,000 of cover. And I do always recommend it for my clients who have little ones. This was an interesting article which jumped out at me in the Daily Telegraph in Sydney in mid-November last year. It was only a small article, but that was the heading, "Stroke's a Child Killer." I didn't know this, but paediatric stroke is actually one of the top causes of death amongst little ones. And more than half of them that don't pass away experience long-term disabilities. The average age of paediatric stroke is 7. And in the majority of cases, the child was previously healthy. They weren't obese, they didn't have pre-existing health conditions, there was no family history of anything like that. I find that quite concerning, actually. The next cover we've got is income protection. We're moving away from our lump sum covers now to our drip feed product. Okay? Income protection, also called salary continuance. Designed to replace your income in the event that you cannot work due to any sickness, accident, or injury. Replaces 75% of your gross income, and it also includes super contributions, so 84% of your total income package is covered under this. It's not 100%, because if it was 100%, you'd have no incentive to get back to work. Now, it covers you to age 65, retirement age, although a lot of insurance companies are jumping on the to age 70 bandwagon now. So if you're a self-employed person, perfect. You can extend these contracts out to age 70. 24/7 coverage anywhere in the world. Holidaying, speaking at a conference, whatever. Bungee jumping in New Zealand, fall out of your harness, hit the ground, survive, and be covered. And that actually happened to a client of mine. It's paid monthly to reflect your income, so it's paid monthly into your bank account, just keeps rolling in until you're well enough to get back to work. Okay, if you're never well enough to get back to work, fine. If you need a short-term claim, 1 year, 5 years, that's fine. If you're off work to age 60, age 65, age 65, age 70, that's fine as well. And the beautiful thing is it's fully tax deductible in any circumstances. If you have a job, self-employed or not, self-employed employee, we can get pretty much everyone covered. If you work over 20 hours a week, you must look at income protection. The simple scenario is, like I've said, insurance, what I deal with, all designed to look after the financial loss you incur from anything happening. If you can't work, how are you going to pay for these investment properties? How are you going to pay back the bank? The bank doesn't care. They'll come after you. How many people do we see on a current affair whose houses burned down, who don't have insurance? What are they going to do now? They're out on the street. It's just the generosity of donations that gets them through generally. There's very few Australians who can really support themselves for more than a couple of months without work. And if you can never work again, I don't need to keep going on. Scenario is no mun, no fun. That's it. If you work more than 20 hours a week, get it. We can look at anyone. We can look at people who work in office jobs, people who work in underground mines. I have all those people as clients. That being said though, no matter how much I try to educate people about insurance, there's always people out there. Nothing's going to happen to me. I'm invincible. We have overwhelming optimism, which is not a bad thing. It's Australian. That's what we're known for. We love the underdog. That's what we're known for. What I find really interesting about the Australian market, and not just Australians, I've found it everywhere, Kiwis, other people I've spoken to, Americans, is that people will often view their assets as a form of insurance. If anything happens, I'll sell the investment property. That's what I got it for. It's a backup. But why should you have to sell these investment properties? Why should you have to draw down on the assets that you're trying to basically set yourself up for so you can retire? Okay? Assets should be viewed as an investment, not as a form of insurance. And what I find really ironic, and this was actually not intentional, one of my staff put this slide together for me. Who is the person in the slide, people? Who is the most famous Superman of all? Christopher Reeves. What happened to Christopher Reeves? This happened to Christopher Reeves. Total coincidence, I swear. Okay? Next, we've got the super cynic. These insurance companies never pay out. I don't trust them. The Australian life insurance industry is actually one of the most heavily regulated industries in Australia, and I do believe it actually is probably the most heavily regulated. I saw an article in the Smart Investor magazine would have been November or December, that issue of last year, where they had various amounts of industries in Australia ranked by how often they were audited and all this jazz. And life insurance companies in Australia audited every month. If you are a tax auditor, get a job with them. You will never have shortage of work. Audited every month, and they are the most heavily regulated industry in Australia. Very different to general insurance. HIH, kick the bucket, than general insurance. Life insurance industry, basically they're audited every month. They can't fail. They're set up not to fail. If they look like they're failing, the government props them up. Very different to the American life insurance industry. And if you want to have a chat to me about any of that, please do come up to me after the conference, after the speech here, or send me an email and we can get into a bit more depth about that. But look, I've never seen life insurance of any of the claims I've paid out, of any of the clients I've had to deal with over the years. I've never seen it do a bad thing. And in our history, 26 years, we've only had one claim turned down, and that was because the client blatantly non-disclosed on their application. So they went to claim, the insurance company investigated their medical history and said, did you lie to us? And the guy's like, thought I could get away with it. And no, he couldn't. But they refunded him all his premiums that he'd paid. Just in case we need some more evidence, and I do hate statistics, I really do, but I couldn't go past this one. Statistics ending the 30th of June 2008, the total payouts across the covers that I can offer you guys totaled over $3 billion for 1 year. $3 billion. $12.18 million per working day was paid out in 1 year. For a population of, 21 million? Yeah, about that. 21 million. I really find that staggering. And they're only going up, which is quite sad. What are my options if I'm not insured? What if I'm in this situation now? Or what if I just, don't want a bar of it? WorkCover New South Wales. I'm sorry I haven't got the Queensland statistics. I can only tell you about possibly the worst WorkCover in Australia, New South Wales. WorkCover New South Wales will pay you for 26 weeks if you are injured at work, 100% of your salary, which sounds pretty good. For 6 months, that's pretty good. The next 26 weeks, they bump you back to your award wage. I can never say that, award wage. I've got a client of mine who's a personal assistant, and her boss values her so highly that he pays her around 85 grand. Her award wage is actually only about 40 grand. That's all he's obliged to pay her. So if she's off for the next 26 weeks, bump back down to 40 grand, which is still better than no grand, but still. Then after that, it sort of gets a little bit hazy and we get to the stage where they try and take you to court and get you off their compo. So it sort of gets a bit hazy after that. We can sell the assets. Let's explore this a little bit more. We've got our investment property. Oh God, I've been diagnosed with cancer. Okay. All right. I need to get treated. It's fine. We'll sell the investment property. Let's do it. We'll list it. Okay, so we list it on the market. Great. What if it doesn't sell the next day? What if it doesn't sell for 5, 6, 7, 8, 9 months? Which is not unusual. But you need the money now. Okay, so to avoid that, we knock all this money off the selling price. We sell it for less than we want to. So it sells. Great. I got some cash. All right, first thing, let's give the bank back what they owe. And then what I'm left with is what I'll treat myself. I'll get myself better with that. Great, that's fine. It's a workable option. But in that space of time, you've caused yourself a great deal of stress, which God knows what it's done to your illness. You've lost an asset when all of this could have been quite easily and stress-free solved by having a critical illness policy. Hi, Sacha. I was diagnosed with lung cancer yesterday. Oh, geez. All right, let me ring up Aviva and we'll get the claim papers for you. Bang. 300 grand, tax-free, in your account, no stress. Get yourself better. I don't care what you do with the money. Go get yourself better. Let's apply for a loan. I have no source of income, but I'm just going to go to the bank and see if they'll give me a loan. I've got hundreds of thousands of dollars in debt. They'll give me a loan. Unlikely, but if you do manage to get a loan, great. Here's 100K. You get yourself better, no worries. What really was the point of that? Because now you've got 100K more debt. Centrelink. Look, we all know that this is barely enough to live on as it is. Regardless of whether you've got a serious medical condition, your husband's died or whatever, it's barely enough to scrape by as it is. It's laughable, really, but my opinion. The last option I've got on here, which I don't have a picture for, is you could continue investing. You could continue your share trading. You know, as long as you've got up here and you've got a finger working, you can sit at your computer and do what you need to do. Fine. What if up here isn't working? What if you suffer a neurological condition and up here is no longer functional? How are you going to trade shares? You need a level head and some thought process going on to be able to do this. I've got a client of mine, excuse me, I've got a client of mine who's on claim for the rest of his life. He was a psychiatrist, ironically, and he had a mental breakdown. It's really not that funny, but it's true. Now, every time he rings our office, he does prefer to speak to Igor, my father. Now, if Igor's not there, he gets a little bit nervous. You can hear it in his voice. And he found out that I was Igor's daughter. So now he likes to talk to me if Igor's not there. And if I'm not there, he gets really nervous and he hangs up the phone. And he goes and sits in his corner and shakes. And this we know because it was documented by the insurance company. Okay? How is he going to trade shares? Your situation, everyone's situation is different. Let's get lighthearted again, as I've tried to illustrate by my little generic pictures here. Okay, everyone's situation is different, and because we're risk specialists, that's why we sit down, have a phone appointment, get your situation out onto paper so we can see what the scenario is and recommend the appropriate amount of cover and types of cover for your situation. Now, because we've got some time today, I've got a little bit more time, I thought we'd run through some case studies to sort of cement in and get you guys involved in any decision-making process if you choose to become clients of ours. Run through sort of, I guess, the 4 stages of life. The first one we're going to look at is the young independents, I guess age 25 and under. Do they need insurance? I mean, at this stage, the general life picture is we've got single or we're with a partner, we're beginning our career, debt generation. They love their social life, very active social life. Mainly, where's the little shiny thing? Do I have one? No, I don't. But I was going to underline drinking there. Mainly the drinking. Saving for travel or deposit on a house even. Mobile, all these repayments and some rent. These people basically work to live. A lot of people I know in this scenario at the end of their pay cycle, whether that's fortnightly or monthly, will have about $2 left in their account. So what sort of insurance do you think they need? At this stage, I wouldn't recommend any death cover because they haven't got any assets really they need to insure, and then no one's dependent on them. Maybe some total and permanent disability cover. In fact, it's probably a good idea. Definitely that critical illness cover. It's applicable at any age and any situation, especially when it covers things like paraplegia, quadriplegia, car accidents at that age. Most young people, interesting, good, great drivers, but scary. And definitely income protection. No mun, no fun. Guess what, mum and dad? Guess who's going to come knocking on your door if they can't earn an income because they're off work? Do you really want your retirement buggered? Because you're going to have to support them if they're injured and can't work for the rest of their lives. Next, we've got our young couples and families, and they, of course, have a need due to increasing debts and commitments. Recently married, long-term relationship, might have kids or at least they're on the horizon, spending a lot of time at work or perhaps even one parent stays at home, mortgage repayments, again the car repayments, registration, insurance, saving or paying for kids' education. This is the classic example I see in a lot of my clients, and I've got a very poignant case study to go through which basically fits this mold. This is the real look at a couple of clients of mine. Middle-aged married couple, actually both 39 years old. I'm sorry if we're offended that I've just called that middle age, but middle-aged married couple. Sole income earner was the husband on 150 grand a year. 4 children under the age of 12. $1.5 million in assets, so they were pretty well set up. They had a bit of debt though, $600,000 in debt. Now basically when I insured this couple, we went for the whole hog, we went for everything. And in the medical history for the husband, perfect. Full bill of health, very, very healthy man, looked after himself, only ate good foods, didn't smoke, didn't drink. Playing a social game of soccer one night, a Thursday night, I believe it was, dropped dead, massive heart attack on the pitch. He's left behind this scenario. He's now got a widow with 4 little ones under the age of 12, no income stream now coming in. And whilst we've got a bit of asset, a lot of that is actually tied up because the debt was spread across all of it. Okay? It was the most humbling experience delivering a $1.6 million tax-free lump sum death payout to his wife. That's all taken care of now. We replaced the financial burden that was lost, or the finance that was lost in his demise. Okay, she never has to work again. The kids are going to go to private school for the rest of their life. Done. The investment property is now paid off. She can just live off that income. The scenario is, we definitely needed death cover for both. We depended on the husband as the sole income earner, which was basically seen when I was able to pay them out. But we also depend on the wife for the home caring duties. That definitely has a financial value. If she passes away, what's the husband going to do with 4 little ankle biters? He's never home. He's always at work. He doesn't know how to deal with kids on that day-to-day basis. Definitely the total and permanent disability cover for the husband because it's related directly to occupation. You need to be working. The critical illness cover for both of them, very important. And of course, the income protection for the husband as well. The children's cover was also an important one. Nothing's, of course, happened to anyone else, touch wood, but we do have it on file. Case study 3. Ugh, I'm starting to feel a bit icky, so I'll just run through all these quite quickly now. We've got the more mature families still having a need due to a changing demographic. Okay, we're getting a little bit older, that kind of thing. If money's tied up in investments, which at this stage it probably is, we still need death cover. We need the income protection cover. No mun, no fun. I want you to think about that when you're thinking about life insurance, because that's the overarching issue we've got here. No mun, no fun. Whether you're the income earner or the income earner in your life, something happens to them. And then we've got retirees. Now, a lot of people, retirees themselves, think that life insurance isn't applicable to them. Depending on your investment needs and all that, it may or may not be. But as I mentioned before, it's actually probably time to look back at your family and say, well, I've got 2 kids, they're 27 and 25. If something happened to them, they're probably going to come to me for help first, and I want to retire. You know, of course I'll always help them, but it's my time now as well. So for a very small premium, you can insure against that. Insurance and tax, a topic all in itself, but I'm not going to even touch on it today. All I will say is if you've got a self-managed super fund, if you're self-employed or you're an employee, all of those different scenarios have different tax implications in the way we can structure the insurance to get the best premium, to get the most tax-effective outcome, basically. So just like your situation, when we sit down and have an interview over the phone, because I'm based in New South Wales, we'll work all this out and we'll come up with the best structure in which your insurance should be owned. That's it. Don't need to say anything else. Please do not do this. I pride myself on education. Okay, I'm hoping I've given you enough information today to make an educated decision to come and have a chat to me or not, see what we can do for you in regards to your insurance needs, and go from there. So, find out what your risk factor is. Now, there is only one way today to do this because I have to jump on a flight back to Sydney. There should be a form on everyone's chairs, the insurance solutions form. I don't actually have one on stage with me here, but it should have been put on your chair. Just wave it up, lovely. Please fill out this form. It'll take you 1 minute. If you would like to arrange an insurance review, please fill out the form. I'm going to jump up the back. I'll be there for about 10 minutes after this presentation. Please come and hand them to me and say hi and introduce yourself. It's valued at $250, but it is free for 21st century attendees and members and guests as well. If you have current life insurance, income protection, critical illness, find out whether you're paying too much. In the last couple of years, there's been huge innovations in the life insurance industry. In fact, we're actually offering comprehensive reviews to all our current clients, saying, guys, things have changed, we can get you much better coverage. Okay? If you don't have any cover, that's what I'm here for, that's what I do. We are the sole representatives of insurance for 21st Century Academy, so that's all I do. Thank you very much. Wonderful crowd. Please fill out the form. We'll have, I think, about a 5-minute break now, and come and chat to me at the back if you'd like me to answer any questions. Thank you very much.